Welcome to Investors Insights. Our topic today, we'll see. We're seeing some great data and information in regards to the economy, and we're going to share that with you today. I think you will like the insight of my distinguished colleagues, as I like to refer to them, Bobby Norman and Trey Booth. Guys, great meeting this morning. Really appreciate all the research you've done to prepare for this vlog. And I think everybody will find it very interesting as to what you're saying about here we are, first of the year 2026 in January. So Bobby, based on that, starting the year off, talk about seasonality, talk about election year.
Yeah, so as our viewers over the years know, we like to talk about seasonality and historical performance of different time periods because it helps us build our portfolio strategies. And as obvious as it may sound, as you can see in this first chart, January sets the tone for the year. And a strong start meaningfully skews both hit rates and forward returns in the months ahead. And with 12 days already in the books for January 2026, the market has had a decent start to the year. As always, no guarantees, but a positive January has historically led to a good quarter, half year, and full year. You can also see that a negative January has led to lower returns in the following months, which you can see there in the chart in the red. Another interesting angle that we're looking at for January and at the beginning of this year for market performance is, as you can see in this next chart, we usually see the market underperform in January and February during midterm election years like we're in for 2026. You can see that we usually see a spike higher for the first few trading days, but then have historically seen underperformance due to the uncertainty that midterm elections bring. And the market doesn't like uncertainty. So we will continue to update our viewers on how the market performance at the beginning of the year might impact the rest of the year, especially in a midterm election year like we're in.
Yeah, and that's another reason we chose our topic today. We'll see. And as we go through that journey this year, navigating through the markets, we'll keep everybody updated. I've received some really nice comments from clients and viewers about how we're posting on social media, different economic news, giving insight on our LinkedIn, our Twitter, our Facebook, YouTube, Instagram. So, Bobby, I really appreciate you keeping up with all that data and all the discussions and debate that take place in this building as we look at that data coming in. And saying data and also saying we'll see, Trey, I'm a nerd. You already know that. And I love economic data. And today you brought a lot at us with enthusiasm and insight, and I really appreciate that. So share with our viewers what we're seeing on the data, which is also very positive.
Yeah, thanks, Greg. Yeah, so we got a lot of backward-looking data last week, or the last few weeks, really, about whether or not the economy is in good standing. And one of the items we've been watching closely is jobs. The labor market has been cooling for months now, and there's been a lot of concern about can we grow without a hot labor market. GDP growth, which is with the gross domestic product, which is our economy, is labor growth, how many people are working, plus productivity growth, how much output per hour those workers are outputting out. And so we've had kind of a slow employment growth. We got an okay jobs picture on Friday with 50,000 new jobs. That's good. It's not going backwards, but it's not great. Under the hood, there was some really good news, though, as wages were up 3.8% year over year. So that's good news. So but a concern about, when we're saying, we'll see if the growth of labor is helping or hurting the economy. And we got some good data on that about third quarter GDP, where productivity shocked us with a massive increase of 4.9%. So why is productivity so strong with wages going up 3.8%? How does that impact us, the markets, and the economy? It's with productivity, it's kind of the magic bullet of economic growth, because you can grow the whole pie without growing the number of pieces, and that's how you can have labor and commerce and capital benefiting at the same time. You had wages up 3.8%, productivity up 4.9%. So that means there's an extra 1.1% profit margin built in there. So labor and capital are both winning at the same time. That gives you this growth without inflation. And so what'll be huge to see is how this flows through, because we're going to get CPI, which is Consumer Price Index, and PPI, which is Producer Price Index, this week. Will that confirm this productivity boom? We're going to get growth without inflation, because without that productivity boom, it is impossible to get that flow through where both labor and capital can win, and we can grow the pie without growing the number of slices, and each slice gets bigger. That's kind of that winning balance we can have. And this 4.9% quarter over quarter annualized growth rate on productivity. It's just a massive data point, and it's flowing through that. Also, it's also good that with that, wages are also going up. So it's not just all going to the bottom line. It's going to wages as well. So some really good data points. And then we're looking forward to see if we can get that flow through. But I guess we'll see. 1 month doesn't make a trend, but it's a great start in the right direction. A great way to close out 2025. And to Bobby's point, looking at January, it's a great way to start 2026. We'll see if it kind of flows through to the rest of the year.
Yeah, well said. People ask us all the time as we start the beginning of the year, how do you think this year is going to be? There are no guarantees, and we'll see. On that note, we hope you have a great week. This is the kind of data we're constantly evaluating here at Five Plan Partners in relation to your portfolios and financial blueprints. We're going to keep you updated, and we appreciate those of you who are sharing our vlog on a regular basis. That's opened up some great doors for us and opportunities, and it's a huge compliment. We hope you have a great week, and we hope these numbers continue throughout the year, and we'll continue to say we'll see, and hopefully it'll be positive like we're seeing here at the very beginning of 2026. We're always here at Five Plan Partners striving to help our clients have better, richer, fuller lives. Have a great week. Thanks.